What the heck is up with condos in Canada? It seems nobody wants to sell anymore. It's not because there aren't buyers looking for them right now. We're going to be talking about that on this week's Canadian Real Estate News Recap. I got 6 other great topics. How is immigration going to impact the Canadian real estate market? Even more interest rates coming up the pipeline. And how is the looming housing crisis, as one economist calls it, going to impact you? And it's not the price decreases that we have seen recently that's this looming housing crisis. It's something else. Welcome everybody. It's October 14th. This is the Canadian Real Estate News Recap here on Bald Prairie Real Estate. My name's Matthew. That's 𝗲𝗲𝗲𝗲𝗲. And of course, we're going to start with a terrible joke before we get in the news. A viewer joke here. What do you call lice on a bald man's head? Homeless. If you have a terrible joke that I can use in a future episode, put it in the comments below. Let's get into the news. The first topic here is from Capital Economics, and they are expecting that the Bank of Canada is going to be able to drop interest rates sooner than other countries because of immigration in Canada. What they're basically saying is that because of all the new Canadians coming to Canada, willing to work at jobs at lower wages, that is going to allow the Bank of Canada to drop interest rates sooner. One of the things the Bank of Canada said is they do not want to see wage increases baked into this higher inflationary pressure. They'd like to be able to get inflation down sooner before that wage increase gets baked in. Basically what they're saying here is that Canadian companies are going to be hiring these new Canadians at lower wages instead of paying existing Canadians higher wages, and that will allow the Bank of Canada to drop interest rates sooner. Lower interest rates does help a lot of Canadians. Higher wages, I would say, impact all Canadians. I think that's what I'd rather see instead of this. Topic number 2 here from Benjamin Tal. That is the chief economist at CIBC, saying that we're just at the start of the housing crisis, not in the middle, not at the end. And it's not because home prices are going to continue to decline or have a market crash. It's because of the lack of supply of homes in Canada. While lower prices right now are temporarily helping people buy houses, it is not a long-term solution. And he's saying that unless we continue to cure this problem of not enough homes in Canada, affordability of homes is going to continue to get worse. Something I've been talking about for a while. This should sound familiar. If you've been watching my videos for a while, I've been saying for a long time, we need more houses and we need them sooner rather than later. Topic number 3 here is a report from Desjardins, and they are saying they expect in 2023, Canadian real estate will become more affordable, but only slightly, especially in Ontario. They're talking here about the higher interest rates. While that is hurting affordability, the lower prices are making up for some of that, meaning that it will be slightly more affordable to buy a house in Ontario specifically and across Canada. They do say in this report, though, that they did also say that the commodity producing provinces will likely see stronger real estate markets than the non-producing real estate markets and the national average, and that they're expecting, no surprise here, that the places, especially in Ontario, Vancouver, the Fraser Valley, areas like that, that saw the most significant rise in prices, will continue to see the most significant decline in prices. Topic number 4 here is a report from CMHC talking about the new construction starts in 3 provinces in particular in Canada, Ontario, BC, and Quebec, and how they expect those 3 provinces to dramatically underperform, missing their targets for new construction starts to make housing affordable in those provinces. I'm going to read this quote here. "We didn't think the challenges were this acute. We thought there was more capacity in order to achieve these goals." In fact, they're saying that even in the most optimistic scenario, those 3 provinces would have to double the number of new construction starts that they're anticipating to happen in order to meet those 2030 goals. Bank of Canada admits that its expectation earlier in the year that inflation would be transitory and temporary was wrong. Shocking. I think most people thought this was going to be a longer term problem. And that, of course, is meaning that we're likely going to see the Bank of Canada continue to raise rates. Right now, at the time we're recording, the betting money is that in 2 weeks, Bank of Canada is going to raise rates another 50 basis points. So a little bit smaller than they have in the past, but still a significant increase. Now, if you've been looking at the inflation numbers in the United States, which just came out yesterday, they missed the targets that people were expecting. Inflation was hotter, and there's now people expecting that they're going to see a 75 basis point hike in the United States, which would put pressure on Canada to match that. And right now, there's about a 50-50 betting money that the terminal rate, meaning the peak where Bank of Canada is going to raise interest rates, is at 4.25%. These inflation numbers out of the United States might change that. Blog.to has the headlines, Toronto real estate takes a nosedive, but this temporary drop in sales is masking a much larger problem, and that is the lack of availability of homes to be built and available existing inventory in Toronto. Of all the major cities in Canada, and Canada ranks very poorly in number of homes per capita, Toronto is well behind the rest of Canada. And so while we are seeing prices drop right now, making it look like housing in Toronto is becoming more affordable, even with higher interest rates, and maybe prices will continue to decline, that is just masking the bigger problem. And that once the market stabilizes, the increases in prices in Toronto are going to continue to go up. The last topic here, it's what I talked about in the intro, and that nobody seems to want to sell condos anymore, especially in Toronto and Vancouver. And not because nobody is buying, because of how much rent is increasing in those provinces. There are many people that have moved out of a condo into a single family home that are now saying, why would I sell this when I could rent this out, cover all my costs, and make a little bit of money and be a landlord? That seems to be happening in droves. In the article they talk with one realtor there that for every condo for sale that they have, there's like 6 that are coming up for lease. Doesn't surprise me with this massive spike in rent rates that we're seeing. And of course, this then pulls inventory out of the resale market, which we're seeing across Canada, lower inventory levels. And condos is one area we're seeing pretty low inventory levels in some areas and still fairly strong demand. This, of course, predominantly comes from first-time home buyers. That is often the starter home in these markets. And if they can't get into the market because that product isn't there or the prices continue to rise, that's going to make it harder and harder for them to get into the market. That's it, guys. That's your weekly Canadian real estate news recap here. If you haven't seen it already, fresh, hot off the press, my brand new October Canadian real estate market update. Check that one out. If you like this video, do me a favor, hit the like button, write a comment below, subscribe if you haven't. You love learning about Canadian real estate. It really helps me out with the algorithm. If you do those things, as always, thanks very much for watching.